Hello and welcome. Today, we're diving deep into the world of inheritance tax, or IHT, in the UK. If you've worked hard all your life to build your estate, the last thing you want is for a big chunk of it to go to the taxman instead of your loved ones. But don't worry, let's look at how you can legally reduce or even eliminate inheritance tax. So, let's get started. Inheritance tax, or IHT, is a tax on the estate of someone who has passed away. This includes everything they own at the time of their death. But what exactly makes up an estate? It includes property, which will be houses and land, savings and bank accounts, investments, including stocks and bonds. It may encompass some applicable business assets. Life insurance policies, if not written in a trust, will be included. And it will include valuables like jewelry, artwork, or vehicles. If the total value of these assets exceeds the nil rate band of £325,000, the excess is taxed at 40%. The nil rate band is the portion of your estate that is exempt from inheritance tax. However, there are several ways to reduce or eliminate this tax through exemptions, allowances, and strategic planning. Although pensions have historically been used to reduce inheritance tax on an estate, because they are currently not considered part of an estate for inheritance tax calculation purposes, this may change in the future, as there are proposals for potentially including pensions in inheritance tax assessments. Let's break it all down. Not everyone pays inheritance tax. If your total estate is below £325,000, there's no tax. If it's above this threshold, the excess is taxed at 40%. However, if everything is left to your spouse or civil partner, there's no inheritance tax to pay at that stage, thanks to the spouse exemption. So, let's look at what happens when your spouse passes away. When one spouse dies, the surviving spouse inherits their estate, tax-free. Not only that, but any unused nil rate band of £325,000 transfers to them, effectively doubling their allowance to £650,000. If they then pass the estate to their children, anything above £650,000 could be taxed at 40%. But there are ways to increase this allowance further. If your home is left to your direct descendants, children or grandchildren, you can also use the resident's nil rate band, currently set at £175,000 per person. This means a married couple can potentially pass on £1 million tax-free. That is, £650,000 from nil rate bands, plus the £350,000 from the resident's nil rate bands. But what if your estate exceeds £1 million? Let's explore more ways to reduce inheritance tax. One of the most effective ways to reduce inheritance tax is through gifting. Any gift you make will be inheritance tax-free if you survive for 7 years. This is called a potentially exempt transfer. If you pass away within 7 years, the gift may still be taxed, but at a reduced rate depending on how many years have passed. It's based on taper relief, which reduces the amount of inheritance tax due based on how long ago the gift was made. The closer you are to 7 years, the less tax is owed. So, how much can you gift? There's no limit on the amount you can give under the 7-year rule, but you need to be aware of taper relief, which reduces the inheritance tax rate on gifts made between 3 and 7 years before death. To ensure gifts are recognized for inheritance tax purposes, it's advisable to keep formal records. A simple way to do this is by keeping a written record stating the date, amount, and recipient of each gift. This documentation can help your beneficiaries prove that gifts were made within the applicable timeframe, reducing disputes with HMRC. You don't always need to wait 7 years. Every tax year, you can give away £3,000, inheritance tax-free. And you can also make unlimited small gifts of up to £250 per person. Plus, any wedding gifts and regular gifts you give from surplus income can also be exempt. Now, let's look at some advanced strategies to cut down inheritance tax even further. Setting up trusts is a widely used strategy to reduce inheritance tax. They can help move assets outside of your estate, reducing inheritance tax liability. They allow you to specify how your assets are distributed, ensuring they are used as intended while keeping them protected. However, trusts can be complex and may have their own tax implications, including potential charges every 10 years. It's therefore important to seek legal advice from a solicitor or an estate planner to determine the best trust strategy for your situation. Another strategy is taking out a life insurance policy written in trust, which can cover the inheritance tax bill without eating into the estate. Now, let's look at another way to reduce inheritance tax: charitable donations. If you leave at least 10% of your estate to charity, the inheritance tax rate on the remaining taxable estate drops from 40 to 36%. Let's break that down with a quick example. Imagine Sarah has an estate worth £1 million. After deducting the nil rate band of £325,000, the taxable estate is £675,000. Without a charity donation, the inheritance tax rate is 40%, so the tax bill will be £270,000. But if she donates 10%, which is £67,500, the remaining taxable estate will become £607,500. Plus, the inheritance tax rate drops from 40 to 36%, and the inheritance tax bill will be reduced to £218,700. So, by making a charitable donation, Sarah's estate saves £51,300 in tax while supporting a good cause. So, we've seen how charitable giving can reduce your inheritance tax bill. But what if you don't want to leave money to charity? What other options do you have? Let's explore some real-life examples of how different people reduced their inheritance tax liability through other smart strategies. First, let's look at John, a single man with an estate worth £600,000. Without any planning, his inheritance tax bill would be £110,000. But by making a gift of £100,000 7 years before he passed, his bill dropped to £70,000, a £40,000 tax saving. Now let's consider a married couple with an estate worth £1.5 million. If they did nothing, their inheritance bill would be £200,000. But by using trusts and making tax-free gifts, they brought it down to just £50,000, keeping an extra £150,000 in the family. So whether it's charitable donations, making tax-free gifts, or using trusts, there are plenty of ways to reduce your inheritance tax bill. But remember, everyone's situation is unique. This video has hopefully provided some brief and general guidance, but it's strongly recommended that you seek professional advice from a qualified expert specializing in inheritance tax to make sure you're making the right choices for your specific circumstances. By understanding the rules and planning ahead, you can make a big difference in the amount of inheritance tax your estate will pay. If you found this video helpful, don't forget to like and subscribe for more financial tips. Thanks for watching, and see you next time.